Sometimes this job simply isn't fun. It is a lot of pain, a lot of volatility, not the best thing to do. Other times it's great. I ultimately enjoy what I do, studying, researching, engaging with the news, thinking about the world. But the past 2 days are the reasons and the times I really just don't like what I do. When the market is being crazy, when we're not focused on fundamentals, when no matter how much work you can do, how confident you can be in your assumptions, the path of the market still goes the other way. What makes it better, though, is when you do see a little bit of insanity, when you can sense that this is wrong. And that is the sense I've had the last 2 days. The trading has been very weird. We talked yesterday about gasps for air. Now, it's okay for the market to be up pre-market, as it was yesterday at the beginning. But then when the trading comes up, it's open, market's open, volumes are up, goes back into the red, it's chilling in the red. That's where it is the vast majority of the day. Then right at the very end, I don't know what happens, but something crazy happens and it just shoots up. Let's not forget, stocks take the elevator on the way down, not the elevator on the way up. That's why we are short right now. And that's why we do our shorts a little differently than our longs. And it takes the stairs on the way up. The stairs on the way up, okay? Stairs on the way up. Today we're seeing a little bit of the same thing. Market's up big in the green in the pre-market. Comes down, spends a lot of the day in the red, and then at the very end of the day just tries to make a burst. It's like, come on, let's try to find some natural price action based on some earnings, which leads us to our next point. Now, I get it. Netflix earnings, not so bad. They're pretty close to expectations. So based on initial reactions, why is the stock down 10%? They're just simply not adding that many people to their service. Not adding that many people to their service. You want a stock that's going to continue to grow, but it looks like they're not continuing to grow so much. So if that's the case, why do they have an relatively extreme multiple for where a company should be, even in a lower rate environment with not so much growth? However, we have much higher interest rates, and the economy is expected to weaken towards the latter half of this year. The banks are even saying this now, and they are fundamentally exposed to a recession. So we're seeing signs of recession. I get it. The consumer is still strong, but it's not like a switch goes off and we're in a recession. It's going to take time for the effects of higher interest rates to trickle throughout the economy. As the Fed has said, we're only now beginning to see the beginning effects of higher rates, and they're not happy with the progress thus far, so they're going to look for more damage, essentially. Now, okay, Netflix still pretty early. That's my initial read on it. Not a lot of people buying last quarter, so where are the people coming from next quarter? Ad revenue, like they're kind of trying to get a little desperate here, trying to get the last things they can possibly do, things they said they weren't going to do in the past, ads, now starting to do. It's just not the kind of thing that makes you want to pump the stock up, right? Especially when it's already actually at a high multiple. I get it that the stock is down, but we haven't owned it at any point. It's always been too expensive for us. People have asked me what I've thought. I've always said it was too expensive, in my opinion, based on the multiple, the valuation, purely. Obviously, it's Netflix. It's a big thing, but I want deals. I want stocks I can make money in, not stocks that I might lose money in. I get it. I'm taking losses this year. It's easier said than done. Anyways, tomorrow is Tesla. And if you remember the Tesla numbers, the production and delivery numbers, there was a massive miss. And I'm not trying to put any shade on Tesla. I'm a big fan of Elon. I think EVs are fine for people that like them. And I'm very excited for the Roadster and the Cybertruck. But the S and the X did not have a lot of deliveries. They only delivered about a little more than half of their production. It's very different than the 3 and the Y. Now, this might all be good in Fed department. People are kind of steering away from the more expensive goods, go to the cheaper goods. That's a good sign for inflation, but the Fed is still saying inflation's hot. Auto's pretty interest rate sensitive, so I guess that'll be one of the first categories to hopefully really see a decline. It's not necessarily seeing such as much as you would expect. I mean, the used car market's been crazy. There's fundamental reasons why it might not return. Just an interesting environment. What matters is earnings are not growing at the rate they were growing. So why are we giving them a multiple that is only justified when they're growing at a very high rate? I'm talking double digits. You look at Apple. Apple's got almost, if not roughly the same multiple, almost roughly the same market cap as it did at the peak when it was growing 30%. 30%. And that was expected to continue. Things are not comfortable for me as a buyer. Look, I want to get long stocks. I actually am long stocks, but I'm long cheap energy stocks where I feel like I can actually make some money buying this business, where I feel like I'm buying a business that is going to pay me as an investor cash. That's what this is about. That's what this is about, okay? I would buy Tesla in a heartbeat if they had a dividend and if the multiple was a little lower. I would buy Nvidia, which I'm heavily short. I'm not short Tesla. If it was at a 20 multiple, maybe I would buy it then. Maybe. Anyways, earnings season has begun. It's going to be an interesting couple weeks. This week, less so than next week. And then we have the FOMC meeting. And then the day after that, we have Apple. Until then, it's anybody's game. But in my opinion, this is the most crucial data we're getting. These are the earnings. This is what can crack the eggshell. We'll see what happens. That's today's video. And until next time, peace out.